Yo, what's going on? I hope everybody's well. Welcome to Phase 1, Lesson 10. This is the remix and the remake. I'm your host, Xavier, also known as The Master Trader. A little bit of stats about myself. I'm an 11-year trading veteran, former advisor with 9 back-to-back green years, leader commander here at Team Precision. I've coached over 700 students, and now 50 of these students are now owning and operating a Discord. Now, before we get into anything, there's some legal mumbo jumbo that I do have to read word for word. You saw what's going on FinTwit recently, right? So Juicy Trades is providing this slideshow and any related materials for educational purposes only. We are not providing legal, accounting, or financial advisory services. This is not a solicitation or recommendation to buy or sell any kind of financial instrument. All investing and trading in the securities market will involve risk, and any decision to place trades in the financial markets is a personal decision that should only be made after thorough research. Now that we got the legal mumbo jumbo out of the way, my goal for you today is to get you with a basic understanding of futures and then show you how you can apply that understanding if you have a strategy, because this is a public event, right? There are people in here right now that are not a part of Juicy Trades. Juicy Trades team, I salute y'all. I love y'all. Let's keep killing it. But there are people in here that are not part of Juicy Trades, and that's fine. My goal for you is to have the basic understanding of futures so that you can apply that understanding so you can try your best to earn what we call a funded account if you don't have a giant account. So the agenda for today, we're going to go over what are futures. Now, let me just stop right here. My biggest goal for FinTwit of 2023 is to get everybody that trades SPY, SPX off that bullshit and start trading ES. We're going to talk about why here in a minute. Just sit back, relax. We're going to go over what are futures, the benefits, and we're going to talk about the main reason why I want everybody off these indexes and get directly on the futures is the one candle fear. We'll talk about that here in a second. We'll talk about why the execution is a lot better and faster. Then we're going to get into the contract specs. Like, how much do you make? How much do you lose? How much can I make? Is it better? Is it less? And then we're going to talk about risk management. And then we're going to get into the goodies that the majority of everybody wants to hear about. All right. So going back here, I'm going to throw a lot of information at you because there are terms that people need to know about. I mean, this is for a lot of people, this is the first time of them cracking to open a futures book. And then we're going to tie these terms together with charts and execution. So if you get lost, once I get to the charts and executions, I promise you, I'm going to knit it all together. But futures are the perfect weapon for day trading. Literally allows you to get in and out without time decay. But what is a futures? What are futures? By textbook definition, a futures contracts are a type of derivative contract agreement to buy or sell a specific commodity, asset, or security at a future date for a certain price, okay? As a day trader, you really don't need to know that, and we're going to get into that in a second. But what you need to know on the back end side of what goes on behind the scenes, when you buy a stock, and theoretically, you instantly own that stock currently at the price that you paid. And when you buy a futures contract, you buy an agreement that states you can buy or sell that asset or security at a certain date and time in the futures, and you're guaranteed if you're holding that contract, you're going to get delivery of whatever that asset is. We'll talk about that here in a second, and we're going to go in grave detail about that here in a little bit. And there's many different types of futures. Diversification is one of the things that I love about it. You can trade index futures. Now, if you trade SPY, SPX, QQQ, and we'll talk about that here in a little bit too, you are indirectly trading a form of a future, in my opinion. You're trading an ETF that follows a future. So theoretically, if you trade SPY, SPY, SPX, QQQ, IWM, DIA, you have indirectly traded the bigger name, ES, DIA, YM, and so on. You have commodity futures, currency futures, also known as Forex, commodities like gold and oil, metal futures, copper, and treasury futures, the 10-year yield, the 30-year, and so on. But my experience with futures, 90% of people have heard that these things are just dangerous. I mean, in theory, all of trading is dangerous. We're all nut jobs for becoming day traders. And theoretically, no matter what you trade, you can lose a lot of money. And this also applies to options. Now, what is the number one reason day traders blow their account? What's the number one asset that day traders blow their accounts on? SPX 0DT options. So it mind boggles me that people are like ES is bad, but their day trade zero DTEs. It's kind of crazy. We'll talk about that here in a little bit. Now, also in my experience, most traders have heard that, oh my God, futures are bad, they're dangerous, you can lose everything. They heard that from somebody who has never traded futures because they heard that from somebody else, right? So the next time somebody tells you that, I want you to counteract and say, have you ever traded futures? And the answer is no. Don't take advice from anybody who has never done it before. And the reason why I'm trying to tell you is the benefits of trading futures outweigh trading options, in my opinion, by far a lot. First things first, you got leverage. You have control of a futures contracts, you're leveraged in, and you can have a little bit of money and get a lot of access to a ton of capital to make trades and bigger moves. And as long as you have stop losses in place, the risk is almost always controlled. Diversification. You don't have to just trade ES. All right. Now, a lot of this presentation is going to be around ES because everybody, not everybody, but the majority of traders and the majority of people here have traded SPY or SPX before. So we're going to refer back to a lot of ES because it's just easy because you're already on the pedestal with this. Okay. But futures are different. You got oil, corn, orange juice. Did you guys see what happened with eggs over the weekend? Like, people are making a killing trading. Remember last year with wheat? A couple years ago with water? I was like, wait, they got water futures? There's a ton of stuff out there that people don't even know. So therefore, there's always a bull market on one of these futures exchanges. Short selling. I'm telling you, you can literally just hit sell market and aggressively get short. And the best thing about it are these next two topics. Liquidity. Liquidity, liquidity, liquidity. ES is arguably the most traded asset in the world. I mean, as soon as you hit buy, fill. As soon as the price hits your stop, fill. And for me, I haven't been jumped to stop yet on ES because of that liquidity. Liquidity is just a fancy way of saying that there's a market provided, that there's a ton of buyers and sellers. And with ES, the liquidity is just outrageous. And the best thing about these futures contracts is what I call no theta, no time decay. So when something retraces on you, you're not sitting there all scared. Another benefit of futures is you don't have to abide by pattern day trader. Now we have to define this, and I have to get all technical and read a definition. Now, pattern day trader is a trader who executes 4 or more round trips. All right, let's talk about round trips. If I buy an asset today and I sell it today, that's a round trip. If I do that 4 times within a week, I'm labeled as PDT, a pattern day trader, and therefore to maintain my margin requirement, I need to have 25K. Now, we all know, and I've taught Finch with this and everybody in my team, you can go in a cash account, but you are limited by the parameters of your cash. If you don't know what that means, DM me, I'll let you know. But with PDT on futures, it does not count. So you can start an account with $1,000, and as long as you pay your initial margin, we'll cover that in a minute, you can go ahead and rock and roll and trade as many times as you want. You don't really need a lot of money to trade with futures, on contrary to what people believe. You don't need a lot. It's just that futures have big numbers. What ES has 4 digits numbers instead of SPY's 3. So people are like, oh my God, I don't know what to do. But you can use a lot. You can do a lot less with and make a lot more just day trading the ES contracts. Now, like I said before, the majority of people here, we are index traders, right? A lot of people trade SPY. SPX, QQQ, if you trade that, you are indirectly trading ES, so why not trade the real thing? Now, the issue with success in any type of trading is 2 things: the risk management and the ability to hold your winning trades, okay? And that's nothing more than the mindset problems, and I truly believe that if you can crack this one code and pay attention to these next 2 slides and work with me, you can legitimately turn your trading around so much, right? The fact that you do not have theta involved in these futures contracts, if you're trading these indexes, meaning the people who are trading SPY, QQQ, SPX, the fact that you can trade the same thing with better risk and no time decay on your retracements will get you past what I see as a 1 candle fear. Now, I sit with a lot of traders, I'm gonna be honest with you, and the biggest thing I hear is I can't hold my winners and I can't get my losers under control. I'm just saying, like the newer traders, and there's people who aren't technically new anymore. People who are like on FinTwit I talk to, 4 or 5 years trading, and it's like the same problem. Now, 1 candle fear is, this is something I made up. This is my term, I made this up. This is when the trader takes it long or short, let's just say a long, and as soon as the opposite candle comes in, like a red candle, they get out the trade. 3 candles later, it's like, oh my God, I should have just held that trade and I would have made 500%. by getting off these index options, you go to futures, you're now dollar for dollar. So by having futures contracts, you don't have that theta involved, and that means you're going to be green until you come back on your spot price. Let's talk about this. I'm going to pull out a pen. Now work with me on my handwriting. I got this pen out. It's going to be pretty ugly. Let's just say you're part of my team and you get these levels and you get these zones every morning, right? This is a supply zone. Wherever the market opened up, this is where we're looking to bounce and buy, right? So we get in the zone and we get out of the zone. Well, let's just say you have perfect execution here. Wait. Trying to get my pen. You got perfect execution and you get in right there, okay? So if you get in there, 1400, that's 2 o'clock. Let's just say, let's get all fancy. Fintuit loves SPX. So, oh man, we got long SPX. And instantly, you get a pop. This pop right here is about 12 handle move at 2 o'clock. You're looking at a 30% gain. All right? You up 30% right now. Bam. If you got a at the money contract. Those are the ones I like to trade. I like to trade at the money. If you got out the monies, you might be up a way bunch more. Now, you can see this candle comes in red. And at the bottom of that candle, which is just right here, you could go from being up 30% to break even just right there, right? So now you as a trader, most new traders are like, oh shit, man, I don't know. Let's see what happens. And the next candle, I know this candle's green, but you see that wick? That candle came out and it hit the 3,800 level. So at this point, there's a huge possibility, and these are estimates, that you are now down 12%, all right? And the farther this goes below that level, if this literally just breaks this level and comes down up in here, you could literally be down. I've seen some crazy stuff happen trading SPX, 70%. So when this starts happening and you're inside these trades, you can't not panic for a lot of people. And it's just like one red candle. This is the issue with people holding, because when you get in these trades and then they pop and then they have one red candle and you see that drawdown of that P&L, you go nuts. And I know a lot of traders, and everybody says don't focus on your P&L, but when you trade something as aggressive as a 0 DTA option, it's very hard not to focus on the P&L unless you're going to risk losing the whole lot. Now we're going to fast forward to something better. We're going to take the same trade with futures. Now let's just say you get in here, same price. Here you get up 12 handles, right? If you got up 12 handles off the top of my head, I can't give it to you. We're going to talk about numbers here in a minute. Actually, let's do this right here. Let's say you buy, I got a calculator right now. So let's say you buy 3 contracts. 3 contracts is 150 per unit times that 12. At the top of this, you're up $1,800. Now the thing about futures here, and we're going to get into a lot of charts here in a second, it's all about money. It's not about percentages. Okay, so you're up $1,800 here. This candle pulls back, and as long as you're above this white line, the way you enter that, you are still green. Even on this retracement here, at the bottom of this wick, you'll break even. And that's the difference. This one little change will allow you to hold your trades so much longer. And because you're thinking, I'm in a supply zone, there's no need for me to get in and get out, my stop loss is at the bottom of this candle. And as long as price doesn't hit the bottom of that candle, I'm not even looking down. I'm looking here because that's my target. And if we break that, I'm looking here because that's my next target. By switching over, just gets rid of all that time decay and allows you to just go ahead and get in and out of these trades like 20 times faster. The execution of the trades is so much better. I mean, there's no strikes. All you got to do is hit buy. You can literally, because of liquidity, remember I was saying liquidity in the last couple slides, we'll talk about this here in a second. It's fast and reliable. So TD Ameritrade, you guys hear me on audio. I trade at SPX a lot. You know, if you put in an order from your phone, there's a circle thing. It goes up. It looks stupid, right? Get off my drawing. I know Roddy Man is somewhere over there making fun of my drawing. But there's this thing that spins around. Even on the even when you put it in on the platform. It sucks because when that happens, that means you're slipping on price. The price is actually moving. For me, I can just literally just hit market, and as soon as I hit market, I'm in the trade at a decent price, at the current price. And that comes from liquidity. minimum slippage, the meaning I don't really ever slip, and I can actually add a stop loss on the actual chart of the trade, and it will automatically take me out of the trade instead of me just trying to fuck around and figure that part out. Now, reasons why futures traders trade, people actually trade futures, is going to be three things. They hedge their bets, meaning that they're buying protection. They're looking to buy or sell an asset in the future day. Maybe I want to buy some oil barrels. Maybe oil's negative and I want to keep it at a negative price and I want to get it for free or whatever. But the main reason all of us use it is speculation, which is also known as day trading, right? And what do we speculate the most on? SPY, which follows what? The S&P 500. Now, for technical terms, the S&P 500 is just a stock market index that tracks the top 500 companies. Investors basically use this as a benchmark. And when we start talking about futures, the closest thing to the S&P 500 will be the E-minis, which is known as ES. Now, for the purpose of this document, I am not going over micros. I'm just going over the big boys today. Now, when you're looking up contracts to have your questions answered, how much money can I make with a futures contract? How much money do I have to pay? How much money do I lose? You want to look up what's known as the contract specs. Now, there's different contracts. They have different specs, meaning an oil contract doesn't trade the same as a NASDAQ futures contract. An ES contract doesn't trade the same as an IWM contract, as a Russell contract. Contract specs basically break down everything that you need to know about and we're about to cover a couple of these, everything you need to know about the futures contract. And most importantly, they also have an ETF. Most futures have an ETF that corresponds to that future for a safer, longer term way for people to get in, a cheaper way for people to get in. Now, the E-mini, this is basically, if you're trading the E-mini, you're basically trading the S&P 500. This is the thing that they refer to on CNBC when they start talking about the S&P 500's up 10 points, or when you turn on investing.com, this is what you're looking at. The ticker is known as /ES. TradingView has exclamation point ES, but it's going to be ES in some way, shape, or form with a / majority of the time. Now, the ETF that follows this is the one that majority of people trade, meaning you trade SPY or SPX. That means ES is going to move first, and technically and theoretically, I know they say it moves at the same time, but kind of delayed, but SPX and SPY follow. So if you traded any one of these two tickers, you pretty much have been trading ES. Now, and I know I'm throwing a lot at you. When I get to the charts, it's going to be really easy to understand, but you have to get this down first. Now, ES moves in something known as ticks, okay? This is the minimum in any contract. When it says a tick, it's the minimum amount that contract can move. One tick for ES is 0.25. So that means if ES is 3,900, you would never see ES at 39.99. It'll be 39.25. And it'll move up from 25 to 50 to 75 to the next whole number. Now, each one of those ticks, you will make or break, meaning you will make or lose $12.50. But ES mainly moves 4 ticks at a time, so that's called 1 point. Now, points and ticks are very similar. They're not similar, but people confuse them a lot. So we like to say handles. A tick is $12.50. 4 ticks is 1 handle, and that's going to make you $50. Okay, so for each point per 1 contract that you have, you're going to make or lose $50. Okay, now how much does an actual contract cost? It's going to be the total value, whatever spot price you got, times 50. So let's say if the contracts were 2,000, with spot price at 2,000 times 50, that's $100,000. But don't panic. You're not going to pay $100K to get into one trade. What you're going to pay is called the initial margin. Now, the initial margin is the initial amount of money a trader must place in an account to open a futures position. This is established by, long story short, by the exchange and the broker. Now, every broker is going to have different initial margins. Now, for me, well, we want to pay attention to right here because we're going to be talking a lot about these futures, all right? And you really want to pay attention to where it says day. So in order for you to buy 1 contract of ES, you're going to pay $500. And as day traders, we're going to be looking to get in and out on the same day and not hold over into the next session after 4 o'clock. If you're looking to trade intraday, these are the prices that you're going to pay. So as long as you got $500 in your account, you can go ahead and strap up and get an E-mini 500 E-mini contract, and you'll be good to go. Now, brokers, notice how TD Ameritrade's not here. You guys know I love TD Ameritrade. Now, the thing is, TD Ameritrade, these where it says day, these are called intraday requirements. If you're swinging these contracts, you're going to have to pay this as margin. Remember, the total value times 50. If it was 2,000, it'd be 100,000, right, as a total value. So they're going to allow you to pay $500 to have control over that. And don't worry, we'll talk about what happens on the downside in a couple slides. So TD Ameritrade does not have a day trade margin requirement. Okay, so in order for you to get in, you're going to pay a ridiculous price like this, and this is why we prefer these, in my opinion, the two best brokers, Tradeovate and NinjaTrader, for futures. These are my two favorites. I know FTMO is a funded trader program. They have a different broker that they use. I can find out for you, but these two have proven to be extremely reliable, cost efficient, doesn't really cost much to open the accounts, and you won't really have to have great customer service, and it's not really too expensive on the commission fees. So these are my two recommended. That's going to be NinjaTrader and Tradeovate. Okay, now terms we have to know before we get to the charts. Spot price. This is the price, and I'm going to cover this on the chart. This is the price that the asset, technically ES, is trading at. This is not the price that you're going to buy and sell for the contract. Next one is going to be the initial margin. The initial margin we just covered is basically the price you pay. Think about it as a down payment for a home. That's how much you're going to pay to get inside that trade. Now, disclosure, I have to read this. All trades done on this PowerPoint were random trades done in simulations. Now, it's very hard for me sometimes to screenshot all this stuff while actually trading. After we made our money today, it was kind of over, so I had to just force some trades on paper. So, long story short, what are we looking at? This is an order screen. This is TD Ameritrade. This is how we're going to get in a trade. Now, every broker has an order screen, right? If you trade NinjaTrader, they have Super Dom. I think Webull has an active trader. There's a lot of these things that you can connect directly to your broker. You can hit buy and sell. This is TD Ameritrade's version of that, okay? So when we get in a trade, first thing to note is here. I'm typing in ES, and right here, this price, you're going to see 3938.50, all right? That price is the spot price. This is the current price of the contract. Okay, so I'm not going to pay 3938.50. I'm going to pay the initial margin. Okay, we'll talk about this in a second. We'll break this all down. Now, this is very important. I need you to pay attention to this part. When you're going to go long by direction, meaning that you're going to take, you're going long, you're buying, and you're betting it's going straight up without any hedging or any weird combining of positions. You want to buy market, limit, or ask. But with futures, all you really need is just to buy market, and you're going to get a great price. And to close that position, you must sell market, limit, or ask. Now, that's just common sense. But when the problem is when you look at the opposite. Now, the majority of us are conditioned for options, so this is going to throw some people off. Now, when you go short by direction, a bearish bet, you want to first sell market, meaning the first button you're going to push when you're going down is the red button that says sell. It's going to feel uncomfortable for a lot of people at first. You want to sell market, limit, or ask. And to close that position, and again, you must buy to cover. Okay, so that means to get out of the position, you're going to have to hit the green button. Okay, we'll talk about this here in a second. We'll walk you through some trades. There are some things to note. There are options contracts for futures. We do not, me personally, y'all can do whatever y'all want. I don't recommend this. I do not trade options on futures. I only buy and sell the contracts directly. So when I'm looking to get inside these trades, all I do is type in /ES. We're talking about ES or whatever your contract is, and I'm looking to buy that contract directly. All right. You then place a buy or sell order. It's very similar to pulling up Tesla on your broker. Like you pull up Tesla, and how do you buy the stock? You just hit buy. How do you go short? You just hit short. And if you have a certain account, you'll be approved for the margin needed to get short or to borrow shares to get short. It's the exact same thing, but long story short, you're doing it on ES. Okay, so back here. So again, current spot price is here. And how am I getting in? It's going to hit buy market. Okay, if you're part of my team, you got access to all this information. All right, we long now. Okay, so I'm long at 3930. Okay, that's my spot price. I'm long one contract. And with active trader, it's very cool, and this is why I really like futures, is the pre-planning. I can see exactly how much I'm going to make at a price. So if price goes from 3939 and it goes up to 3946 with one contract, I already know I'm going to make $385, right? For me, pre-planning is critical, and this is what's going to go ahead and take your trading to another level by going ahead and being able to pre-plan and manage this ahead of time. Now, I'm buying this on market. I highly recommend you do not try to buy on market with SPX options contracts. Please note that. Now, when I got in this trade, it's very important to note that the spot price is 3939. That means I did not pay 3,000. I didn't pay that amount of money. All right. I paid the initial margin. So in order for me to get in, I paid $500 to get one contract at a spot price of 3939. Now we're looking at charts. Okay. Now, once we got in the trade, again, pay attention here, right here. 3939. Contract moved to 3941. I'm guaranteed that if I cut this contract, not guaranteed, but I'm going to make $112. I just got one contract on. But the thing I really want to bring your attention to is right here. This is going to be the game changer for most people. Most people cannot manage risk for a damn. That's why you see a lot of traders come in, and then they come in and they make money. Then in the course of a week, whether it's an emotional drawback, the market got choppy, whatever it is, they'll lose half their account. And it's like, well, what happened? And a lot of times what happened was the inability to manage the risk, because once one loss happens, a bunch more losses will end up happening for traders that are new because they don't log and they don't know how to get out of trades. Because a lot of times, about 60% of what I found, 60% of the people that I talked to outside of juicy trades were trading options with no stop losses and quote unquote a mental stop by area on the chart. Now, when you flip this over and come here towards the futures contracts, you have this actual stop on the actual chart. Current price of that is 3938. So right here, I'm risking $50, and I know I'm risking $50 because that's my stop loss, and I'm targeting up here. All right, 39, let's call it 3960. I can't even go that high right here because of the screenshot. But if I was just to go to 3948, I was $50 to try to make $450. What are we talking about? Right? This changes the game for a lot, because if price turns around, automatically gets me right out the trade. A lot of you really need this. Like, this is the answer to a lot of people's problem right here, but they don't want to do it because futures have big numbers. I'm convinced. Okay. Now, last area. Notice how the stop is at the bottom of this red candle. This particular area, as the trade got moving, I was able to lock my stop in at 3940. So 3940 right here, $50. Right? I only got one contract on. Obviously, when I buy more contracts, these numbers are a lot bigger. Today we had 100 contracts on. Everybody in the chat room saw what we did. But we're just doing this for the purposes of education. All right, so my stop loss is now dragged up to 3940. So if I'm shooting up to here, right, this is the most important part. That's my target. I don't care about any pullback because I have a stop loss here on a highly liquid asset. Now, I know a lot of people say don't walk away, but I'm going to tell you my experience. I walk away all the time. Once I'm green and I do this and I move my stop up to break even, man, I be running around my house, talking to people on the phone, talking shit on my audio feed. I don't care what happens. And because I don't care what happens, there's a good chance I'm going to hold to my target. That's the issue that, like I said, a lot of you guys need this so that you guys can be able to do that. If you have an options contract, the minute that things turn red, you lean over in front of your seat and you're like, what the fuck's going on, right? That's eliminated just from this one little thing that's on the chart called stop loss, okay? Let's break everything down. When you get in a trade, number one, you didn't buy futures options. That's like a very common thing for new traders. When they pull up futures, they see options on the left because they trade options, so they go to the options contracts, right? You're not buying that. You're going to type in the name on your order screen, and you're going to hit buy market or sell market to get in the trade. Just know you paid an initial margin fee to get in and not the spot price. The spot price is the entry, the current price of that contract. Number 5, you had a stop loss on the trade. And number 6, don't trade without a stop loss. Don't be that guy. I'm going to tell you why. Now, show me the money. How much money can I make? How much money? That's what everybody want to know. How much money can I make trading these futures contracts, right? Long story short, per handle, I broke this chart down. I want my pin here. Okay, here's my pin. Per handle, like if you have one contract and it moves one handle, again, you make 50 bucks. Okay. For me, I'm in this particular range here. These are my 3 lot sizes. Today, I ventured outside my lot size, big time, and it paid off. It was great. But these are my 3 lot sizes. So, for us at Juicy Trades, our goal, if we're going to pull a trigger, is to be in this area. This is what we're targeting minimum. That doesn't mean every time I pull the trigger, X gets 50 handles. But my goal is to hit at least 20 handles per trade, okay? So 20 handles, let's just say you got 10 contracts, that's 10K, okay? How much is my risk? My risk is usually 5 or less points. 7 points is my maximum risk. So therefore, I risk $2,500 on a high probability setup that could net me 10K. When you trade options, the majority of people who trade options, they can't do this. And because they can't do this, meaning I know what I'm risking for a dollar amount wise, and I know what I'm trying to get for a dollar amount wise. Over the course of 500 trades, almost always, 90% of traders fail, they blow up. When you make these switches and you become calculated and precise, it allows you to better manage your trades. The next thing is scaling. You have a system that works, right? And you have this kind of risk to reward. You don't need to hit every day. You don't need a 100% win rate. I got traders in my room, a couple traders that's shooting a 50% win rate, and they are profitable. I mean, they are in this category range here, and they're killing it, right? Because their risk to reward is so on point, and they started with 1 contract, worked up to 3, worked up to 5, worked up to 10, and I'm telling you, life is different when you start trading 20 ES contracts. It is different. And you can manage the risk confidently with no problem. Now, risk management is the issue. I'm telling you, risk management and mindset is the issue that everybody faces. Now, the ability to place stops on your chart, as I just went over, will give you the ability to control your risk management. You are no longer having anxiety, hesitation, none of that shit's there anymore just because you got the stop. Now, when trading futures, you know exactly, as I just demonstrated, how much I'm going to lose before I get in the trade, how much I can make. Technically, as everybody says, you have a potential for unlimited earnings if you let it run that much. But me personally, I like to go from trigger to target and repeat that process and get my piece. The biggest thing is once your stop hits, and this is what I'm telling you, a lot of people need this. Like this right here, I want to circle. The computer gets you out. Like me personally, I don't sell any of my trades. I put sell orders around my targets. I might drag that sell order down to where we're at, and I might drag my stop loss really tight to where price is at, but I don't hit sell anymore. I just put orders on my screen, okay? By automating a lot of that, it just takes your trading way different. I promise you, like a lot of people would do so much better if they were to put a trigger entry with an automated stop, a trailing stop, with a sell target, and just leave for the rest of the day. I truly believe most people would do a lot better than what they do, okay? And because the computer's getting you out, there's no more, oh my God, why did I not cut at this level? I could have got out at minus 7%. Now I'm down 90%, and I gave back 2 weeks of progress. So that's gone. Be very careful to never trade any contract without a stop. And as I just said, you can automate the whole process. Now, why do people tell me futures are bad? Actually telling me all this good stuff. Why is it bad? Because if you don't place a stop loss in that trade, you have a potential for unlimited risk. That futures contract can go up forever. It can go down forever too, and that's where the stop loss comes out. Now, I'm going to tell you straight up, over the course of 3,000 ES trades, over the course of 10 years of my career, I've never had a stop hit, but I don't really trade news events that much. News events is when extreme volatility comes in, but I have traded volatile times in the market. I've been around for circuit breakers in 2018, and I've traded a lot of the stuff. I've never had stop jump. So if you have a stop loss in place, I can't guarantee you that you're good, but I'm going to tell you from my experience, I'm slinging around 20 plus contracts, you're going to be good, okay? Now back to the charts. Getting short, okay? You need to pay attention to what you're doing if you're new to options and you're trying to get short anything. If you're new to futures, all right? In the options world, in order to get short, it's very common that people buy put options as a bearish bet. And they call that I'm getting short. Don't let that language fool you when you come to this pit. In the world of futures, you're not buying anything to get short. You will first have to sell, like get short first, like just sell. And somebody's gonna loan you some technically contracts, right? And then you have to buy to get out. It's the opposite. So always make sure you have a stop in place, but always make sure when you're getting short, you know exactly what you're doing. So here's a short trade. I literally, like I said, I was just forcing trades today. Y'all heard me on audio, and I was like, yo, I need to get on this paper account, and I'm just going to be forcing a bunch of trades. So here's a red candle, so I just hit short, right? I'm not saying that this is a setup or anything of that nature, but we get short. There's my stop, right? My target's down here. I'm looking for price to come down here. My stop's here. If price starts to move down, I can just move my stop on the bottom of each candle as always. And as a reminder, you pay your initial margin to get in the contracts. Your spot price is $3,915. You didn't pay $3,915 to get in. You paid your $500 per contract. You're now in the trade, and you can go ahead and manage your risk. So where's my stop? 3,922. 3,922. So I put a random stop at a random area. Screenshot it. So 3,922 is $975. Now if I go down here to what 3,986, it's 39. I can't even go that low. But long story short, the number down here will be a lot bigger than what that pretend stop is going to be. Okay. So going ahead into other futures contracts, NASDAQ futures. Talk about something in a minute. The tick, the minimal fluctuation is called the tick. All right, is 0.25. Now per point, your make or lose. 4 ticks is a point. Remember a handle. Per handle, your make or lose $5. Now said ES was $12.50. NASDAQ, I'm gonna tell you, for me, I trade Tesla. I've traded oil. I traded all types of things. NASDAQ is the fastest moving asset that you can trade. I mean, that I've ever traded. It walks laps around Tesla. Okay. They list quarterly contracts. We're gonna talk about expiration here in a bit. And all futures contracts, they open Sunday at 6 and they close Friday at 5 with halting at 4:15 and 4:30. Since I said this on the next couple contracts, I won't say that I'm gonna skip it. And the ETF that follows the NASDAQ is the QQQ. All right. So like I just said before, NASDAQ is extremely volatile. I am telling you right now, before you try to trade in Q, paper trade it. This is 3 times Tesla, 4 times SPX. Okay. It destroys anything that you have ever traded. I promise you, NASDAQ is extremely fast. You have been warned. Don't be a cowboy. Russell, ticker's RTY. It's going to be 50 times the index. Minimal fluctuation is a lot smaller, but don't let that sleep on you because it moves fast too. And again, 5 points. And again, I'm going to be skipping these because I've already went over that. The ETF is IWM. Now, Dow futures, ticker is going to be /YM. Minimum fluctuation is $1, and again, 5 points. Notice how ES is a lot more heavy in the dollar amount for points. We know the trading hours, we know the expirations, and that's going to be called DIA. Now, trading hours, long story short, you can trade almost 24 hours. They open at they open at Sunday at 6, and theoretically they close around 5 o'clock on that Friday p.m. They do have short-term breaks, but long story short, 6 p.m. is the time to watch. Now, all these future contracts will expire. They usually expire once every quarter, and that quarter is the infamous quad witching. That's when those contracts are expiring. Do not hold into expiration. All you really need to know from the back end is that the second Thursday of that month that expires, so the second Thursday of March, you're going to see a new letter, a new H, Z, whatever it may be. If you're on my team, you know what I'm talking about. You're going to see a new contract open. That's called rolling. And on that end of that third Friday in that month, that particular contract completely expires. Now, what I'm about to go over, in my opinion, is the nuttiest shit in the world. And this shows you how rigged the markets are, right? So circuit breakers or the thresholds at which trading is halted for when basically the market is pretty much getting hit in a single day, right? So if the market drops down 7% in a day, so SPX is down 7% in a day, they're literally stopped trading for 15 minutes. If it's ever down 13% in a day, they're stopping for 15 minutes. If it's ever down 20%, I haven't seen a level 3 halt. I don't think I've seen that in my time. I remember 2018, we got a couple halts. But if you're ever down 20%, they'll stop it for the whole trading day. Okay. So everything we've covered has gone into the idea of speculation. I'm day trading contracts. You now know about contract specs, stop losses, why I prefer them, the benefits, and the only con. But what goes on behind the scene? Now remember, before we get into this, I want you to take your trader hat off, okay? A futures contract is an agreement to buy or sell something at a futures price, okay? So we're taking, everybody take your trader hat off. Take that trader hat off, put it on your desk. I'm going to tell you to pick it back up in a second. Now this is Bob. Bob grows soybeans, okay? Current price of soy is $10 per unit. Now Bob wants a guarantee that he can sell his soy. Maybe, I don't know, maybe it ain't raining enough. The crops don't look good. All right, he got this half-ass soy that he needs to get out of there because he has a ton of inventory. Don't know. Point of the matter is Bob needs a guarantee that he can sell that at a certain price in the future. So Bob will literally call his broker, sell a futures contract, and then by the time that futures contract expire in March or whatever, got a guarantee at the time, the price at the time of that contract, he has the option of selling that and somebody has to take delivery of that. Now us as traders, we really don't care about that. We only care about the price movement, and we will close the contracts before expiration, all right? So the cool thing about futures is the ability to gain access to funding, okay? And I'm going to go ahead and do something here. If you guys are here, do me a favor, peep up and look at the Zoom chat. I'm going to throw some links in there for you guys, all right? So what is a funded account? All right, the only catch 22 about a funded account is the majority will require you to trade futures in some way, shape, or form. Now, in my opinion, this is the best way to get access to funds, okay? Do you know how to trade? You have a high win rate in a small account, mid-size account, right? The problem is that when most people start trading, they blow a couple accounts and they lose a lot of money. The majority of them quit. This will allow you to get access to a ton of capital and honestly, a lot less risk than what most people can endure. So if you can pass an evaluation, I'm gonna talk about that here in a second, you can get funded up to $300K to trade with, okay? But you must hit their profit goals without their account tagging what's known as their trailing drawdown. So what am I telling you? You can jumpstart your trading career. Most people will blow 3 accounts, in my opinion, in their trading career without a mentor. If you have a mentor, you might blow 1, you might see immediate success, okay? But instead of you grinding with a small account, why not pay a small subscription fee? People don't get this, right? Why not pay a small subscription fee, which is 9 out of 10 going to be a lot less than what you'll lose on one particular trade, to have the opportunity to trade 9 times the size of your normal account. And then take the money that you make on that normal account and fund your real account and keep going crazy. Why are people not talking about this? Why is FinTwit not telling you about opportunities like this? All right? What's the catch? What's the catch? Catch is you pay a monthly subscription fee to try out, which is less, like I said, than what most people will lose on one single SPX trade. But once you pass, you have to split profits with the firm 80-20, meaning that they're going to keep 80% of what you're going to keep 80% of what you make. They're going to keep 20% of what you make. They have a trailing drawdown, and they know that since they have a trailing drawdown, most traders will fail this part of the process because 90% of people don't have discipline and 90% of people don't have a clear system. But if you are a disciplined trader that trades a clear system and you only execute off your system, this is the perfect opportunity for you to go ahead and grow your account and get access to capital that you need to scale your trading business. Okay, so this is what it looks like. I need my pen. I want to talk about 2 accounts here. You got a 50K account. You can pay $167 a month while you are trying out. Once you pass it, you get funded, right? You have to make 3K in that 30-day period. I think it's 35 days with Apex. Don't quote me on that. Do your own research. But if you make 3K without trailing down 2,500, you get 50K within a month. I mean, you could literally know how to trade today. Go take out this trial, and then you can have 50K to trade with tomorrow. And if you want to trade big, was what I recommend. If you have 50K in your account now, why would you try out for 50? Go for the bigger account. You pay 600, basically 517 bucks. You can make 15K in that 30-day period off that, which is what, 10% of the account. As long as you don't hit that trailing drawdown at 6,500, you got 250K. All right. I put a link in the Discord, not in the Discord room. I throw it in my Discord room too as well, but I put a link in the Zoom webinar chat for a discount so that you can even pay half off of that. You don't even have to do it. You pay half off. Now, the cool thing about Apex, if you really want to get fancy with this, they will allow you to buy up to 10 accounts. And then they allow you to buy something called a trade copier. Me, Calvin, and a couple other people have been doing this like last 3 months. When you place one trade, let's say you pass the evaluation on each account, 250K, you got 10 250K accounts. When you place one trade on one account, it mirrors it on all 10 accounts. So if you make 5,000, you can do the math, 5,000 times 10. That's called leverage. All right. Now, before you do anything, do the research on your own. Now, I gave you a link in the chat room to start your trading career. There's a discount code there to go ahead and get you half off. And I am partnered with Apex. Do your own research. Apex does an excellent job of explaining everything with videos and documents and lots of videos on their website. So be sure to go ahead and check them out before you do anything. And last month we had 22 students pass, and to the left, I've gotten permission by these 2 students to go ahead and share their success here. There's 22, so the month just started. We have a lot of people on trial. So at the end of this month, I'm hoping to have 70 people pass, and we're going to keep that going. So as we head out, and again, guys, one thing I wanted to say, I'm going to open this up for a Q&A. There's going to be a exit screen with animations. Once that goes off, the recording's going off, then we're doing a Q&A. Now, things I want you to remember about futures and why they're better. Number 1, they have no strikes to pick. You just get in. They are very liquid, 24-hour trading, no theta. Spot prices is not the price you pay. The initial margin is the price you pay. But again, if you're on my team, I'll see you guys tomorrow at 9. No, I'll see you guys at 7:30 in the morning. We're also hosting a webinar this Sunday at 8 p.m. with Darkpool. And besides that, we're going to go ahead and shut the recording down. If you have any questions, stay on after the animations. That way I can go ahead and get your questions answered. But besides that, we're going to go ahead and shut down the recording, and I'll see you guys on the next one. All right, guys, we're about to do this Q&A. Hold on. I got to figure out how to stop recording.